Hello everyone. So in this chapter what we are going to learn? We are going to learn about basics of partnership. Okay. So we will understand what is a partnership, what is a partnership firm, and till last year we have learned about what is a sole proprietary in your 11th standard. Okay. Now in 12th standard we will be learning about what is a partnership. So let us understand what is a partnership first. Let us understand what is a partnership first. So as per section 4 of Indian Partnership Act, so see, partnership firm, when you form a partnership firm, there is something called as Indian Partnership Act. It's a law. Okay, so this law has various provisions in different sections. Okay, so partnership needs to follow this act. Now let us understand this. So as per section 4 of Indian Partnership Act, partnership is relationship between persons, okay, who have agreed to share the profits of the business carried on by all or any of them acting for all. Okay. So what is a partnership? It's a relationship between the persons who, what relationship? Business relationship. They have agreed to share the profits of the business. Okay, carried on by all, that is, this business may be carried on by all the partners, or it may be carried on by one or two partners, and they may act on behalf of everyone, that is all the partners. Okay, now person who has entered into the partnership with one another are individually called as partners and collectively firm. Okay, and the name under which their business is carried on is known as a firm name. Okay, so whatever is the name of the business, that is known as a firm name. Now let us see here. So name of a business is known as a firm name. Partnership is a separate legal entity. Partnership is a separate accounting entity. So now to understand this point, let us take one example. So separate legal entity. Okay. So now let us take an example. Let's say this is a partnership firm. Okay, and we have two partners over here, A and B. Okay, now this A and B partners, they are having a bakery business. Okay, now they have sold some cakes to customer C. Okay, now customer C got some food poisoning because of this, and he has filed a case. Okay, filed a legal case asking for compensation against this partnership firm and against this partners. Now in this case, can partners A and B say that, see, it is not me who has sold the cake, it is the firm who has sold the cake, so I am not responsible for selling this cake. Okay, so if you are suffering from any food poisoning, you have to file a case on firm, but I am different from the firm, I am not liable. Is it correct if the partner says this? No, right? Why? Because partners, firm is made up of partners, so partners are also liable. So is partnership a separate legal entity? No. Okay, now is it a separate accounting entity? Let us understand this. So is the partner separate accounting entity? So let us say this is partnership firm and these are the partners. Okay, these are the partners. This is a firm, these are the partners. Now see here, whatever is the capital contributed by the partners, capital contributed by the partners, okay, that is amount invested by the partners in the firm. From firm's point of view, it is something which firm owes to the partner. So for the purpose of accounting, always remember, partnership firm is a separate accounting entity. So partners are different. Individually partners are different from the firm. So though partners have invested the amount in the firm, from the firm's point of view, the capital, it is known as a capital which is invested by the partners. And let's say if we close the firm tomorrow, we will have to give this money, that is capital invested by partners, back to them. Okay, so in this case the capital which is invested by the partners is like a liability, because firm owes this amount to the partners, so it is a internal liability. So is the partnership firm a separate accounting entity? Yes. Did you understand this? Any doubts here? Okay, write this. Okay, now let's understand features of a partnership. So features of partnership, see, 2 or more. So minimum number of partners should be 2. Okay, because if it is only one person, then it will be known as a sole proprietary. Correct. So to form a partnership, minimum number of partners should be 2 or more. Okay, then maximum 50. So as per section 464 of the Companies Act, which came in 2013, maximum number of partners was earlier 100. Okay, then Company Miscellaneous Rules 2014 has limited the maximum number of members to 50. Okay, so now maximum number of partners in the partnership firm has to be 50. Okay, because this rule has come after this act, so this is the current maximum number of partners. Okay, so Companies Act is like a different act. Okay, like we have Indian Partnership Act, like that there is something known as Companies Act. We will learn about that when we are learning companies. Okay, even that is there for your 12th. Now agreement, oral agreement or written agreement. See, what should be allowed in the partnership firm? If it is a oral agreement, is it allowed? Is it valid? So the answer is both oral agreement and written agreement is allowed. Okay, it is allowed. Only thing is, if it is a written agreement, then it can be served as a proof in your court. Okay, oral agreement, we cannot say that he said this, you said this. You cannot prove it in the court, correct? Whereas if it is a written agreement, then it can be proved. Okay, and in case of disputes among the partners, it is easy if you have a written agreement, okay, which can help them to resolve the dispute. So, but as per Partnership Act, both are valid. Both are valid. Okay, write this. Partnership must carry a lawful business. Lawful business, 2 words we have to mark here, lawful and business. So business, partnership must carry on a business and it has to be lawful. That is, it has to be legally acceptable. Legally. So to understand it, let us take one case. Case 1. Okay. Let's say these are 2 brothers. Okay. 2 brothers, A and B, or their siblings. We call it as siblings, and they have some ancestral property. Now they are planning to sell this ancestral property and the sales value is 1,20,000 and it was purchased. Okay, it was purchased for, let's say, 20,000. So there was a profit of 1 lakh. Okay, profit of 1 lakh. So can I say that this A and B are into a partnership? Can I say that? Yes. Can I say it? Come on, answer. So listen here. Now A and B, okay, A and B, although they have earned a profit, see, this is not their business. This was just a one-time activity. One-time activity. Okay, so what they have done, they have sold this, and maybe this whatever profit has been earned is distributed equally between A and B. Okay, so when you say business, your main intention should be the business has to be carried on again and again. They are not agents who sell the property and then distribute the commission and all that, correct? This is just a one-time activity. They had some ancestral property, they wanted to sell it, and whatever is the profit that they have earned, they distributed it. So it is not a partnership. This is not a partnership. So A and B are not partners. Why? Because see, this is lawful, correct? Although this is lawful, it's not a business. It is not a business. So for A and B to be partners, they have to carry on some lawful business. Now let's write this, then we will go to the case 2. Okay, now case 2 over here. So let us take an example again of X and Y. So X and Y are friends. Okay, then they contribute some amount to open a public library. Now this public library provides free books for reading to public, and they may be charging some nominal fees, very nominal fees, okay, just to bear the expenses of this public library. That's it. Okay, now here if you see, is X and Y doing any business? So how will I know whether X and Y is doing a business or not? See, is the intention here to make a profit? No. Intention is to help the public by giving them access to number of books so that they can read it. Okay, so is the intention to earn the profit over here? Is intention to earn profit? No. If the intention is not to earn the profit, then it is not a business. So X and Y are not partners. Okay, so for them to be partners, they have to conduct a lawful business. Okay, just write this, then we will go to case 3. Okay, now case 3, you have two people, A and B, and they have opened a gambling house. Okay, gambling house. Now country in which they have opened this gambling house, there gambling is illegal. Okay, gambling is illegal. So now see, A and B have opened a gambling house. Here the purpose is to earn profit, so it is a business, but it is not a lawful business. Okay, though it's a business, it is not a lawful business. So A and B cannot be partners. Their partnership is not valid. Okay, so this is very important. This may be asked in your MCQs. Okay, they may give you different cases and ask you whether it is the partnership is valid, whether it's a business, it's a lawful business. That time you should know. Okay, just finish this. Okay, now the next one, profit sharing is must. Let us understand. So let's say it's a partnership firm. You have 3 partners. Okay, you have 3 partners, A, B and C. This is a firm. Now out of this, C partner. Okay, C partner is partner for profits only. Let us understand what this is. Okay, year 1, okay, let's say their profit sharing ratio is equal. That is, whatever profit has been earned by the firm, It is distributed equally among all the partners. So profit sharing ratio is 1:1:1. In year 1, there was a profit of 1,20,000. So this profit was distributed to A, B and C equally. Okay. So it comes to 40,000 each. Okay. Now, year 2, there is a loss. Let's say loss is 60,000. I have written it in the bracket because it's negative. Now, since partner C is for profits only, this loss is distributed by A and B equally. C doesn't distribute the loss. He is partner in profits only. Is it allowed? What do you think? No. Okay. So even if you think that this may not be morally correct, okay, so it is like injustice to A and B. A and B have their own reasons to take C as partner for profits only. Maybe C has some specialized skills, okay, that can be done only by limited number of people, or C has some goodwill. Okay, so for that reason A and B may accept to this condition, but whether is it legal, okay, let us understand if it is valid as per Partnership Act. So see here what they are saying, profit sharing is must. So profit if they earn, that has to be shared, but no such condition for loss. So it is valid if some partners are in the firm only for profits. Okay, so this is valid. Fine. Okay, now just write this. We will go to the next one. So next is mutual agency. It is known as a true test of partnership. So true test of partnership. Mutual agency means all the partners in the firm have to act as a agent, or they have to work on behalf of other partners and firm. Okay, now let us understand what does this mean. So you have 3 partners. Okay, you have 2 partners, A and B. Okay, now so A and B. So A was absent, okay, A was absent, and B has purchased a furniture for the firm of rupees 10,000 on credit from C. Okay, and on B, it is purchased on behalf of firm, and B said that we will pay you after 15 days. So after 15 days, C comes over here. Okay, that time B is outstation, B is not in the town. So C gives the invoice to A and asks for the payment. So A says that B has bought this furniture. Okay, so I don't know, I will not pay. Is it valid? Is it valid? So answer is no. So A is also liable for B's activities. So whatever activities B is doing on behalf of firm, both A and B, that is all the partners in the business, are liable. So that mutual agency, the relationship between the partners is that of mutual agency. So if one is not there, the other has to act as an agent on behalf of other. Okay, so all partners are principal and agent among themselves. Okay, so this is a true test of partnership. Why is it known as a true test of partnership? See, even though all other conditions of your partnership, features of partnership you fulfill, and if you are not able to fulfill this feature, then your partnership will not be valid. Okay, that is the reason it is known as a true test of partnership. Now let's go to the rights of partners. So let us understand what are the rights of each partner in the partnership firm. So every partner has a right to participate in the management of the business. Okay, so right to be consulted about the business matters, right to inspect the books of account, right to share profit and loss, okay, right to disallow admission of a new partner, and every partner has a right to retire from the firm after giving a proper notice. Now let us understand this point number 5 over here. So every partner has a right to disallow admission of a new partner. Now understand this. Let's say this is a partnership firm, okay, and it has 49 partners. Already it has 49 partners. So now this partnership firm, okay, now let us understand this point in detail. Every partner has a right to disallow admission of a new partner. So this is a partnership firm, okay, and let's say it has 30 partners. Already it has 30 partners. So here is C wants to be admitted as a new partner in the firm, okay. Wants to be admitted as a new partner. So now this partners vote, okay, 29 of them say yes, one partner says no, C cannot be admitted as a partner in the partnership firm. So will C be admitted? Will C be admitted as a partner or no? Yes, no. Okay, so in this case C will not be admitted as a partner. Okay, so it's not based on majority, it has to be 100%, that all the old partners or existing partners should accept C as a new partner. Even if one person says no, new partner cannot be admitted in the firm. That is what it means. So every partner has a right to disallow admission of a new partner. Disallow admission. Okay, that is important. Now, every partner has a right to retire from the firm after giving a proper notice. Let us understand this. So, sixth point. Again, we will take an example of a firm wherein you have three partners, P, Q and R. Okay. Now, R wants to retire from the firm. Okay. Now, as per their partnership deed or whatever they have written, agreement of the partnership, what has been written is any partner can retire after giving 2 months notice. Okay. So R gives notice to P and Q on, let's say, 1st Jan 25, okay, that he will retire on, let's say, 31st March 25. But P and Q say no, they do not agree to this. Is this allowed? So answer is no. If this R is giving a proper notice, then other partners cannot disagree or disapprove that notice, and they have to allow the other retiring partner to retire. In this case, R to retire. Okay. So proper notice is important. So what is a proper notice? It depends on the agreement between the partners. Okay. Now the 7th point, every partner who has advanced loan has the right to receive an interest on it. If nothing is specified in the partnership deed, interest will be 6% per annum. This we will come back to this point later on. Okay. Now let us understand what is a partnership deed. So just now I told you, agreement or written document containing the details of partnership. So what is a partnership deed? It's an agreement between the partners or a written document, and it contains all the details of the partnership deed. So let us understand how this partnership deed is. So this partnership deed is on the stamp paper. Okay. So this stamp paper is as per Indian Stamp Act. Okay. Then what else is there in the deed? you have name of firm, name of partners, business, then that is nature of business of the firm. Okay, business means nature of business of the firm. Then you have profit sharing ratio among the partners. If there is a loss, what should be loss sharing ratio? Okay, now understand, profit sharing ratio and loss sharing ratio can be different. Okay, and if some partners are only for profit purpose, then that should be mentioned over here. Okay, if nothing is given, then we assume that profit and loss sharing ratio is same. Then what should be the capital of the partners? Capital distributed. What should be the capital of partners? That is capital invested by the partners. Then what should be done in case of admission of the new partner? Then if some partner wants to retire, what should be the terms and conditions of the retirement of the partner? Then in case of death of the partner, what should be done? Okay. Then you have roles and authorities of each partner. Then if there is some partner salary which has to be given, that should be written. Then your partner's commission. Okay, now if there has to be some interest on capital which needs to be given to the partner, the rate of that interest on capital should be mentioned. If interest on drawing needs to be charged, then rate of that interest on drawing needs to be mentioned, and so on. Other terms and conditions. Then this will be signed by all the partners, signed and accepted by all partners. Okay, and then there will be a seal. This seal will be by registrar of firms. So this means that it's a written partnership agreement, which is known as partnership deed, and once you get the seal, that means it is registered with the registrar of firms. Okay, so this is a partnership deed. So just write this. So now let us understand what is the importance of partnership deed. So see, if it is written, it will help them to regulate rights and duties. When it is specified in the written document, everyone can refer to it. Okay, and it will avoid the misunderstanding or any disputes among the partners. Correct? And the third thing is, it will serve as an evidence in the court. We have already discussed this when we discussed what is written, what are the benefits of written agreement over oral agreement. Okay, then next is elements of the partnership deed. So that is what all partnership deed should contain. So as I told you, firm's name, partner's details, firm's business, duration and place, that is address. Then capital contribution, so how much capital should be invested by each partner, profit loss sharing ratio, salary, commission, partners drawings, interest. Then if there is some limit on the drawings of the partners, that should be mentioned. Then loans, what are the loans that will be taken? Okay, then remuneration of the partners, other roles and authorities, then admission, death, retirement, goodwill calculation. Then in case of dispute, how will you resolve that dispute? Then if some partner is insolvent, okay, what do you mean by insolvent? We have learned this word last year also in 11. Insolvent means the person is not able to pay. Okay, so if some partner has become insolvent, in personal capacity the partner has become insolvent, then how to handle that? Then financial settlement. Okay, so if there is a dissolution of the firm, that is firm gets closed, then how to settle the account. So all this is given in the partnership deed. Now if there is no deed, then provisions of Indian Partnership Act 1932 will apply. So as I told you, sometimes the deed can be oral or written. Now if there is no deed and still if it is a partnership firm, valid partnership firm, then the provisions of Indian Partnership Act 1932 will apply. Now what are those provisions? We will learn it later on. So now the next point, important provisions of Indian Partnership Act 1932. So what are the important provisions of Indian Partnership Act 1932? So if all partners agree, a minor can be admitted into partnership for benefit of partnership. So let's say if the all partners are agreeing, then a minor can be admitted as a partner only for benefits of partnership. So what do you mean by benefit of partnership? So if there is a profit, you have to share it with the minor. If there is a loss, minor will not bear it. Who is a minor? Less than 18 years. So now let's say there are three partners, A, B and C. So C is a minor. Okay, C is a minor. Okay, now both A and B have agreed that C will be a partner. Okay, so if A and B, that both the partners have agreed that C will be a partner, then in that case this minor C will be partner in benefit only. Okay, now let's say their profit sharing ratio is 1:1:1 equal. So year 1 there is a profit. There is a profit of, let's say, 1,20,000. This is distributed to all three of them, A, B, C equally. So C is a minor and he gets profit. Okay, but let's say year 2 there is a loss of 60,000. Then this loss of 60,000 will be borne by A and B. C will not share this loss. Why? Because he is a minor and minor can be admitted into partnership for benefit of partnership. So whatever benefit he is getting, he will get. Whatever losses they are incurring, the partnership firm is incurring, has to be borne by the other partners. Okay, this is one of the important provision of Indian Partnership Act. Just write this, then we'll go to the next one. So next is registration of the firm under Partnership Act is optional and not compulsory. So when we just now we prepared a format of partnership deed, I had written, right, seal of registrar. So if you register it, you will get that seal of registrar. Now that registration is not compulsory, it's a optional, but there are some benefits when you register a partnership firm. So this will give you a legal protection. So if you register, that means it will give a legal protection. So that will tell you that partnership firm deed is not only written, but it is also registered. Okay, so registrar of firm has approved it, so it will give you a legal protection. Then it will enhance the credibility of the firm. Okay, what do you mean by enhance the credibility? See, if this firm wants to show that they are a genuine partnership firm, okay, who is carrying out a genuine partnership business. Okay, so how will they prove it? Once they have a legal documentation which is registered, then it will be easy for the third party to trust that partnership firm. Okay, so it helps them to enhance the credibility. So in case of loan, okay, loan procurement will be easy. Why? Because they have a proper documentation and registration of their partnership firm. Then if there is a dispute among the partners, it will help in resolving a dispute. So these are some of the advantages of registering a firm. Okay, so though there are advantages, understand that registration is not mandatory. Okay, it's optional. Okay, write this, then we'll go to the next one. Okay, next point is, unless otherwise agreed by partners, a firm is dissolved on the death of a partner. So what does that mean? See, unless otherwise agreed means how will the partners agree in the partnership deed? Okay, in partnership deed, when we saw the format of partnership deed, elements of the partnership deed, just now we saw, right, what should be done if some partner dies. Okay, on death of a partner, what should be done? Okay, so it has to be clearly mentioned in that particular partnership deed. Okay, whether the firm should continue, how to settle the accounts of a deceased partner, everything should be mentioned in the partnership deed. So if that is not done, then the firm is dissolved, that is, firm is closed on the death of a partner. So let us understand. So let's say there are three partners, okay, X, Y, Z. Okay, now this Z dies. Okay, now in their partnership agreement or partnership deed, there is no provision mentioned of what should be done in case of a death of a partner. So in that case, this partnership firm needs to close the business. So in that case, this partnership firm needs to close the business if nothing is mentioned. Okay, so just write this. Okay, now let us understand what are the liabilities of the partners. Okay, if a partner carries on any business in competition with a firm without the consent of other partner and earns a profit from such business, profit shall be paid to firm. Okay, so this is important. Business should be in competition and without the consent of the partners. Let us understand what is this. So this is a partnership firm. And you have three partners over here, A, B and C. And they are carrying out a bakery business. So they have their own bakery. Okay, this partnership firm. Now C. Okay, C is selling cookies. Secretly selling cookies. Okay, so without the consent, so A, B doesn't know about it, they don't know about it, or they do not have a consent of C doing a business. Now selling cookies, now cookie is also related to bakery business. So in the bakery, in their partnership bakery, they have everything, cakes and cookies. So this C is running some business, okay, which is in competition with their partnership firm business. So in that case, if let's say C earns a profit in year 1, he has earned a profit of 20,000. Then this profit will be given to firm. C has to give it to the firm. Now in year 2, if C has incurred a loss of 10,000, then this loss will be borne by C. So understand this. See, what they are doing by putting out this liabilities is every partner should run a responsible business. If some partner is doing some cheating or secretly doing some business in competition with the firm and taking the advantage, then your provisions of the Partnership Act will save the other two partners. So if there is a profit, give it to the firm. If there is a loss, you have to bear it. The partner who is carrying out the business secretly has to bear it. So this is like a punishment to that particular partner. Okay, so just write this, then we will write the second liability. Now the second one, if a partner earns a profit for himself from any transaction of the firm. So profit is earned for himself from any transaction of the firm or use of business property or business connection. Profit so earned should be paid to the firm. So let us understand the case over here. So this is three partners, X, Y, Z. Okay, so X, Y, Z is the partners and Z is a friend of C. Okay, so C is a supplier of the goods. Okay, so there are too many suppliers. There are too many suppliers in the market apart from C. But C convinces Z that you give me a business and I will pay you 10% commission. So Z agrees, and then C sells good worth rupees 1 lakh to the firm, and then on this he gives 10% commission to Z. Okay, so that is 10,000. So now here what is happening? Z as a partner is earning profit for himself. Okay, for the transaction of the firm. So this 1 lakh is sold to firm. So this is a transaction of the C with the firm. In that transaction, Z is earning some profit for himself. So this commission should be given to firm. Okay, so this commission Z has to give it to firm. Did you understand this? Any doubts here? Okay, write this. Okay, now let us understand the transactions between partnership firm and partners. So the first transaction is interest on capital. Let us understand the concept first. So this is a firm and these are the partners. So A, B and C. Okay. So these are the partners. So partners have invested a capital in the firm. Correct. Partners have invested a capital in the firm. Okay. Now from firm's point of view, this amount invested by the partners is known as capital. And this is a internal liability. We have already discussed this point. Okay, while discussing a separate legal entity, no, separate accounting entity. Okay, when we discuss that firm is a separate accounting entity, that time we discuss this point. Okay. So now firm is giving interest on capital to partners. For investing this amount, firm is giving some interest on capital to partners. So this interest on capital is given by firm to partner. Okay, so firm is giving. So it is like expense to firm. Okay, so this word is important. Like expense. See, this is not an actual expense. It is like expense. So we will understand the difference between the like expense and actual expense later. But for now, understand why do I say it like expense? Because to apply debit credit rule. Okay, to apply debit credit rule, it will be treated as a expense. So I am saying it is like an expense to the firm because firm is paying it. Okay. Now the next is interest on drawings. So let us understand this. Again, we have three partners over here, A, B and C, and this is a firm. Okay. So drawings, partners are taking out drawings from the firm. Okay. Now partners are taking out the drawing. So partners, if there is some interest on drawings, partners will be paying it to firm. Correct. So this interest on drawing is paid by partner to firm. Okay. So firm is receiving it. Firm is receiving this interest. So it is like income. Okay. Again the word like income. It is like income, okay, for applying debit credit rules. Okay. Not income, it is like income. Means similar to income. Okay, but there is some difference that we will know it later. So similar to income, and it is for applying debit credit rule, we will treat it like an income. Okay, now write this. Now understand one thing, there is a difference between withdrawal of capital and drawings. Okay, let us understand what is the withdrawal of capital and drawings. So withdrawal of capital is permanent. Okay, so when you are withdrawing a capital permanently from the business, that is known as a withdrawal of capital. Whereas drawings, okay, and withdrawal of capital may not take place often. Okay, withdrawal of capital will not be often, whereas drawings can be taken out regularly by the partners, because drawing, see what will they withdraw? They will withdraw interest on capital, their partner's salary, partner's commission, their profit sharing ratio. So regularly partners will withdraw this from the firm. Why? Because that is the source of income for the partners individually. So drawings will be regular. Okay, it's like a regular withdrawal from the firm for their personal use or personal purpose, whereas withdrawal of capital will be sometimes. Okay, whenever they want to take out that capital permanently from the business, that time they will take out some lump sum amount of capital, withdraw that capital. Obviously it will be as per the partnership deed and consent of all the partners. Okay, so withdrawal of capital is different from drawing. So how will I know whether it's a withdrawal of capital or drawing? It will be given in the question. So understand this concept very clearly. Okay, accordingly your interest on drawings and interest on capital calculation will change. Okay, depending on whether it's a withdrawal of capital or it's a drawings. Okay, so there is a difference between withdrawal of capital and drawings. Understand this. So let us write withdrawal of capital is not drawings. Okay. Now the next one, loan to partner and interest on loan to partner. Now this word is very important. Loan to partner. Now let us understand what is this. Loan to partner. So this is a firm. Okay, it has 3 partners, A, B and C. So this is a firm, and this is partner C. Okay, so C is taking a loan from the partner. Okay, so loan to partner. So here firm has given loan to C. Okay, so when firm has given loan to C, C will repay it after some time as per the terms and conditions. So from the firm's point of view, loan given, firm will have a benefit of it in the future. So what is the benefit? That C will repay it in cash. Okay, so benefit of this loan in the future is firm will get some money and C will repay it. So when you have the benefit of that in the future, either in cash or kind, then that particular thing is known as an asset. So this loan to C from firm's point of view is asset. Okay, so this is asset for the firm. Okay, now again we will take the same example. This is C, this is firm. Now since C has taken the loan, C will be giving interest on loan. Okay, this interest on loan will be given by C to firm. So for firm, this interest on loan which is received or receivable from C is a income. Now mind you, I have not written the word like income. Okay, understand this. I have not written the word like income because it is a income for the firm. Okay, and different names to this is, we can call it loan to partner. Okay, or it may also be called loan by firm. Okay, different names which are used over here. Okay, write this. Then we will go to the next one. So next is loan by partner or interest on loan by partner. So important words are by. So don't get confused. So most of the students will make a mistake in loan to partner and loan by partner. So what is loan by partner? This is a firm. You have three partners, X, Y, Z, and Z. Z has given a loan to firm. Okay, so this loan which Z has given to the firm, from firm's point of view, it is a liability because firm owes this amount to Z. Apart from capital, the partner has also given the loan to firm. So from firm's point of view, this is a liability, correct? Because it has to repay this loan to the partner in the future. Now see, in this, interest on loan will be paid by firm to partner, correct? So interest on loan. So see, there are two interest on loan. Interest on loan, okay, to partner, and interest on loan by partner. Now this interest on loan by partner has to be paid by firm to partner. So from firm's point of view, this is a expense. Now remember, I am not writing it as like expense. It is a expense. Okay. So what are the different terms used over here? They can say loan by partner or loan from partner. Both are same. Okay, finish this, then we will go to the next one. Next one is rent paid to partners or rent payable to the partners. So let us understand. There is some office building and owner of this office building is Z. Okay, now there is a partnership firm. The partners are X, Y, and Z. Okay, this is a partnership firm. Now this Z is the owner of this office building also, same Z. So now what partners are doing is they need some office premises, so they take this office building on rent. Okay, they take this office building on rent and pay rent. The firm is paying a rent to Z, pays rent to Z. Okay, so when the firm is paying this rent, it is an expense for the firm, not like expense. Again, I am writing expense for the firm. So rent paid to partners or rent payable to partners is an expense for the firm. Okay, so just write this. Now the next one, partner's salary. Okay, so what is a partner's salary? So let's say this is a firm. Okay, this is a firm. A, B, C are the partners in the firm. Okay, A, B, C are the partners in the firm, and let's say C is a active partner. Okay, C is the person who is managing the business. So firm decides, that is all the remaining partners decide, plus C, and plus it has to be in your partnership deed also, that firm will be giving a salary to C. Okay, so the salary to C given by firm to partner is a expense, but it is like expense. Like expense, when I say like expense, it is an expense only for debit credit rules. Okay, so it is like expense. Write it. Okay. Now the next one, partners commission. So commission is basically performance linked incentive which is given. Okay. Usually commission will be percentage of your sales or profit. Correct? And it should also be authorized by partnership deed. So partnership deed should have a provision to give partners commission. Okay. Now see here, this is a partnership firm. You have 3 partners, A, B and C. Okay. So now 3 partners. So what firm did tells you that each partner, okay, so whatever business is brought in by each partner, okay, whatever new customer, new clients are brought in by each partner, every partner will get 10% of commission of sales. Okay. So now A and C in a particular year, A and C have brought a business, okay, brought a business to the firm. So now firm will give the commission to the partners at 10%. Now this commission given by the firm to partners is like expense. It's not an expense, it is like expense. So write only for debit credit rules. Okay, so wherever I am writing like expense, you also write it as like expense. Finish this, then we'll go to the next one. Okay, so with this we have understood the concept, basic concept of what are the transactions between the partnership firm and the partner. There is one more known as interest on current account. We will see it later. Okay. So now let us understand, let us go to the point number 7 of right to partners. So now let us go to the last point of rights of partners. Okay, let us go back there. Okay, so this is the rights of partners. Last point, every partner who has advanced loan to the firm has a right to receive an interest on it. If nothing is specified in the partnership deed, interest will be 6%. Now see here, this is a firm. Okay, it has 3 partners, P, Q and R. Okay, now let's say R has given a loan to firm. That is what it is saying. Who has advanced loan to firm means the partner who has given a loan to firm. Okay, so R has given a loan to firm. Okay, now as per this right, if nothing is mentioned, see, if the partnership deeds mention some interest on that loan, then the interest will be given according to partnership deed. But if nothing is mentioned, then interest will be given by the firm to R at the rate of 6% per annum. This is a right of partner. Okay, now let us see this. Now let's say, now loan was given to firm. Okay, so this is for, okay, so let us take one example over here. So this is loan by partner, correct? Loan by partner for the firm. Now remember, this is not loan to partner. Okay, when the firm gives loan to partner, that time this condition is not applicable. When the partner is giving loan to the firm, this is applicable, this right. Okay, understand that. Now this is a loan by partner to firm. So see here, let us say that this loan by partner was rupees 1 lakh. and it was given on 1st April 25. Okay, now partnership deed doesn't mention anything on interest on loan. Okay, still the firm has to pay interest on loan to partner at the rate of 6%. So on 31st March 26, the interest will be 1 lakh into 6%. Okay, now this is 6% per annum, so you have to calculate it proportionately. If loan was given somewhere in the middle of the year, then you have to calculate it proportionately according to number of months. So here it comes to 6,000 in the interest on loan, and this will be given by firm to partner, in this case R. Okay, just write this point. So this is one of the important rights to partner. Okay, so in question they will give that the firm has taken a loan from the partner or loan by partner, and they will not mention you the interest rate. So you should not forget calculating the interest on loan in that case. Okay, you have to calculate it because it's a right of the partner. Now see here, whatever we have seen, interest on capital, interest on drawings, then partner's salary, then your partner's commission, okay, all this whatever we have seen, interest on loan to partner, interest on loan by partner. So everything needs to be mentioned in the partnership deed. Okay, there has to be a clause in the partnership deed wherein it is mentioning ki if there is a interest on loan, what should be the rate, interest on capital, what should be the rate, interest on drawings, what should be the rate, partner's salary, how much should be given, partner's commission, how to calculate that. Everything should be there in the partnership deed. Now let's say if there is no partnership deed or there is no such clause in the partnership deed. Okay, so now, and if the partners are disputing, okay, that interest on capital should be given, one partner is saying it should be given, some other partner is saying it should not be given, then in that case your provisions of Partnership Act will apply. Let us see that. So this is a point number 7, that if there is no deed, then the provisions of Indian Partnership Act apply. So let us understand this. So interest on capital, if there is no deed, then interest on capital will be 0%. Interest on current will be 0%. What is in current account, what is interest on current, we will understand it later. Then interest on drawings will be 0%. Then partner's salary, if there is no provision in the deed and partners are disputing, then nil, that is 0. Then partner's commission, nil. Then interest on loan to partner, 0%. Understand the words, loan to partner, that is firm has given a loan to the partner, but if deed doesn't provide any interest, okay, then as per the provisions of Indian Partnership Act, 0%. But interest on loan by partner, loan by partner will be 6% per annum. We have just now we have seen this is one of the right of the partner, correct? So even if some loan is given by the partner and nothing is mentioned in the partnership deed, there is a right which we saw, that right of a partner to get the interest at 6% per annum. So same applies over here. Then 8th is, there profit sharing ratio will be equal. Okay, so if you see, other than the profit sharing ratio equal and interest on loan by partner at 6%, everything else is nil or 0. Okay, so if there is no partnership deed or oral agreement and dispute which is arising due to that, this is what we need to remember. We have to apply provision of Indian Partnership Act, and as per the provision of Indian Partnership Act, everything is 0. Okay, now everything 0, 0, 0, nil, 0. Only interest on loan by partner is 6% per annum and profit sharing ratio will be equal. Okay, just write this. So that's it for today. Okay, so we will continue learning about this, okay, in the next session. So that's it for today.